Okay, we just had news at 8:30 Eastern, watching this 2-minute bar here. London low 6101.50, and currently we're 6116.50. So we're having a bit of a surge here. Settlement from the previous day coming in at 6118.50. This dotted line right here. And these railroad black lines up here, 6120s and change. That's the new day open gap up here. And above that is the new week open gap way back December 16th. So I'm just going to watch and study price action here a little bit. Take a look at the charts. And this is a 2-minute chart. This black line right here that we sprung off of, that is the actual London Open. So I always look at the London Open. This orange line, this is the hunting zone. So this was the range. So the low of the range, the high of the London range. It's about 3 hours, 2 a.m. to 5 a.m. Eastern, that I measure this range on. But I always want to have this London low. What is this gray? This is a New York range for 30 minutes, open range. So when New York midnight open happens, 12 midnight, I give it 30 minutes and mark that range. So notice how price right now is respecting that range. So that's very interesting that we didn't go back above to the new day open gap, or the settlement. So we're coming back. So the key is going to respect the middle of the range or this London open. And are we going to violate London lows prior to the open? Here's RTH open, New York right here. And this is the beginning of a silver bullet right over here. So we've got a ways to go, but I'm just watching what price is respecting right now. So notice how price did not violate London open. So just sitting on hands, not going to do anything, because for me, even though that was the main news catalyst for the day, I want to see New York reaction, give it 30 minutes, and then it's all about this 1 hour golden time right here. See what price does. So let's look at the other time ranges on the charts. So this is the daily, obviously, with this daily here. And these are Bollinger Bands. So we're way up here on a premium. So if you're swing trading and you're short here, you might have to be patient until next week. The mid comes in at 5991.60. So I've got a marker down here. And then there's another marker here at 664. So that's a level. So these are two levels that I have marked out on the daily. I would not go long. That's the bottom line, looking at the daily. I'd just be patient. We've absolutely had no two-way action since prior Wednesday, the 15th. And what happened the 15th? This was CPI day. Over here, this long black candle, that was FOMC day. So we've retraced all the way back up to that FOMC bar, and the body of that bar, 6126. But we went all the way up prior day to 5135.5. The daily really reveals the secrets, and it also helps me be patient, because there's no way I want to do anything here until we make a break. A true break's going to be when we go below 6100. Next chart, Bitcoin, it's already broke. You can see that's the weak sister right here. These two candle bars. Here we are right now, 102. You could say we're above 100. Yeah, but we had a high up here at 110 all time. So we've come down from the high up here down over here. And notice these upper Bollinger Bands were totally pierced for 3 days in a row. This is a 9 EMA, and the blue is a 3 EMA. So again, back to the daily. On the right is the NASDAQ. Next chart. All right. This is the big one right here. The range chart on the Renko with Keltner channels. Very similar to the Bollinger Band. We're in premium zone territory. We were going to go down red. Where's the red middle? 6079. And again, my marker here is 6085.25. That's a conservative level to retrace back this week, but it's not having it yet. It's actually reversing here with the little speck of green. Here's a weekly. The weekly 3. So this is the candle right here. And what I did was I took the high and the low of the week so far. So 5994.50 high is the low, 5994.50, and the high is 6135.5, and the middle 6065. So where is the middle? That's on the Keltner right here. And that comes in right around here. I could mark that down, but I wanted to just say, let's just see if we can get 8.5 before 6.5. But I've clearly marked it on the weekly. Next chart. All right, this is the 4-hour. So the 4-hour with Keltner channels. So it's a time-based chart. And we're flagging, bottom line. Mid on this is 6097.50. So we've really had this lower zoom up because we're not doing two-way action. We had a big zoom up, and this is coming back from all Tuesday. Total trend day up with no two-way action, and we're holding the trend right now. And we may even tap up 6126, which is upper Bollinger. We'll see. But 4-hour right here. Canary in coal mine is these 3 charts on the left, the US dollar. We are going down a little bit. So the sloping line from January 1st is down. VIX, hard down since January 1st. But look what's bucking the trend of the first 2 charts. Third chart is the 10-year Treasury yield. This is January 2nd, the start of the year. And what you see here is an uptrend. So this was the day after inauguration. We hit the low, and that low came in at 4.531, okay? And how does that match up to January 2nd right here? Not quite a double low, but almost. But right now, here we are coming back. This is going up with an uptrend. So based on this, if we hold the Treasury yields at 4.617 and we go try to reclaim this fair value gap, I think we've hit the highs for January. That's a big, bold statement, but I'm saying if. And this is a doji candle with these other 2 charts not agreeing yet with uptrends. This is the Sol one. So this is something to watch because, again, inverse relationship, Treasury yields to the stock market index. This is the MAG 8. The Sol downtrend is Apple. Look at Apple from beginning of the year. Amazon down here below it, uptrend. Oil uptrend. Bitcoin still on an uptrend. US dollar slight down. Google, Tesla, NVIDIA. And look at NVIDIA really from Tuesday, Wednesday up. Now, again, this is pre-market. Nothing's open. You see the little orange notations of where it looks like the price is going to be. But I just want to take a peek at where my MAG 8 are. Bitcoin on a bigger chart on the daily. So this daily right here is got that high of day on the 21st. Buy side liquidity 110, and all-time highs previous were way back. You had to go to December 17th. So what's happening here is we're back in play with this fair value gap. So this fair value gap now is being respected. Its price is below it. So I'm interested in if we hold support at 98,430 in the coming sessions, and then lower Bollinger Band way down here at 90 and change, and the sell side liquidity level is 92.32. And back to the 2-minute here. So let's just make this a little more legible. So what's it doing? It's respecting here. So I'm going to just lengthen this at 8:30. So I am going to draw a special box in the next part of the video, which will have the open range. So this is a discount to the settlement of the prior day, which again is 6118.50, and we're at 114.5. So we'll see. This is a day after a major trend day up, and the time again, 8:44.46 and change. Okay, here we are Friday after the London hunting zone at 5:27 a.m. Eastern Standard, January 24th, 2025. Apple, this decline on Apple is not ending, and Nvidia is still on the up. Look at this gap, volume imbalance. That's a real big liquidity void up there. Tesla up, Google up, Amazon looks like really super strong here. Crude is just hanging in 74.84 right now, just under 75 a barrel. Bitcoin hanging out at the zip code on a year-to-date incline right in this fair value gap. Okay, so that's something to watch. Will it have escape velocity to really get past this, or is it going to ultimately fail and go below it? And then the dollar, we'll go through that. Next chart. But look at this Friday chart here. All week, green into premium location territory. So obviously, at the end of the week, I can't expect this thing to drop all the way. But if I were looking for a level, it's going to be the red line 9 EMA next week. But this is where we are Friday AM. And this is a 6062.2, 6062. This red line 9 EMA. We're way up here with the 3 EMA at 6129.40, but I think we can do much better. This is a big gap between the two, and mid comes in way down here at 59.96. I think that's possibly a bridge too far, but the point is, this was the inaugural first week of the new power of the United States, and the transition's been quite bullish and the market reaction. Earnings next week will be in full force. So I expect that to definitely impact, because we're going to have a lot of big earnings in the next 10 business days after this Friday. So would I be buying? Absolutely not. But I'm going to have to really take a healthy dose of patience here, because I've been patiently waiting. Now, there is a volume imbalance here. So let's just see what that looks like if I take off. So this is the volume imbalance right here, and that comes in at 6093. So very minimum here. I do think we tag that volume imbalance, not necessarily today, but next week sometime. So that is Wednesday, Tuesday, Wednesday. So Friday here, the little black candle. Thursday was a continuation trend up. Wednesday, Tuesday. So it's been a monster rally. Let's get back to naked chart here. And this mid is basically flat. So if I scrunch this up, we're way down here on the lower Bollinger Band at 5827.75. So that is not really narrow, not overly wide. I'd say it's about average compared to where we were in 2025. You can see here, we started out a 59.47. This is the candle right here where we started the year out. There we go. So this trend line is inclined up. So that's too crazy to try to figure out. So I'm going to get rid of some of this stuff. Let's get back to the naked chart. All right. So where are the main markers? The main markers here is, I was pretty much looking at the 3 EMA. Going to get rid of this. If we were going to get a downside of any minimal proportion today, I'd look at the 3 EMA. 6129.4 is where we're at right now. Upper Bollinger Band, 6165. That totally could happen too. You see here, when did we last touch it? We tagged it with the premium candle wick on Wednesday. Next chart. And my favorite chart, mixing a time-based chart on the right with the daily, which we've already gone over, Monday, Tuesday, Wednesday, Thursday, and just after the London hunting zone for 3 hours. Right here, 3 EMA, currently at 548 is 612803. Okay. And here is the Renko with Keltners. So the middle Keltner is definitely a level 6097.49. Now, this doesn't have to happen on a Friday. It can happen next week. But the point is, when was the last time we even touched it? And you got to go way back here to the earlier in the week. It didn't quite make it in the middle of the week. It was more Monday, Tuesday. So that's the big thing. We've already bumped into the upper Keltner, which is currently 6158, and we've tagged it twice. So this has been a very sustained uptrend, and it's just not wanting to come down. It's just been taking a vacation up here, and it's very reluctant to go down. And I'm not assuming that it will go down to meet the red mid Keltner necessarily Friday, but it's just good to know where does that measure out. So I've got marked out here 6084 by 6097, 6098 and change. And you can see here we've got the first Renko bars red coming in, and we've still got a few hours to go before the New York Open. Next chart. Here is the barometer. I've enlarged the chart to expand to the major day, which was December 18th, where we had these long bars because of the FOMC. So this is a major structure, and I wanted to point out the US dollar had this fair value gap created after the 18th of December. And you can see here currently, Friday, the 24th, we've dipped back into this rectangle here, fair value gap, and we're staying above so far the red line, which is the middle part, consequent encroachment of it. So this is something to watch and see next week if we're going to break above or keep breaking with no respect to the fair value gap. So the jury's out. We have to give it some time, but you can see we spiked up all the way to a high of 110. And then the volatility, same thing, a fair value gap created on the wider rectangle here. And we've broken through that this week with the downtrend. You can see this diagonal line here is down, just like the US dollar. This is representing the first trading day of 2025. So down sloping. And then the US Treasury 10-year yield on the micros is opposite. So rather than a downtrend line, we've got an uptrend line. You can see here at the bottom on this long rectangle, this was a fair value gap created after FOMC. We have not disrespected and tagged that at all, unlike the VIX or the dollar. So this is being stubborn. We're holding above currently this volume imbalance from Wednesday and Thursday. And what we've got above this is a fair value gap area in the 470s to 475. And the start of the year was right here. And you can see here we're maintaining that incline. So that wraps up these three. These are the canaries in the coal mine to watch. And if we keep having 10-year Treasury yields into the end of first quarter, second quarter, this is going to provide headwinds. And currently the VIX is not going into the 12s. That's my red line. But again, we're below these fair value gaps. And so I would say that's the weakest chart of the three. And the dollar's at a do or die point on what it's going to do. If it's going to go below and close, it's about to close for Friday on where it closes. So that's going to be very interesting. Let's close it out with the summary of the last chart. 5-minute chart. You can see just by taking a look at this from a distance, we're in a range that's contracted, compressed. So like a coiled spring, it could break on Friday either way. Above, we've got an Asia high for the year 6156 up here. London is this orange rectangle. That's the range right here. And this gray rectangle represents the PM prior day open range, and the CE comes in at 6136. So you can see here we've already had price. This is the London range right here, the hunting zone. The orange rectangle gives us the range. We're on the lower portion of it. So for me to be convinced that we're going to have a meaningful displacement, eyeballs to the left. The last few minutes of Thursday, it just spiked way up. This was really important because we were in a real compressed range for most of Thursday. And then we just spiked way up these last few minutes. So that to me is real manipulation. And so that had the high of day at 6153.75 for Thursday. And then Asia, we had the buy side liquidity broken from the prior day high. So that represents the Asia high, 6156. And now we're breaking. So for me to see that we're going to have meaningful displacement, we've got to break the PM open range. That's the first half hour from 1:30 to 2. And that range here is still pretty narrow. So call it 6133 on the lower end. I'd like to see price get down below this and hold below this. So that's the recap. Again, it's 6.16. This is the last chart for the video. We'll see how they close, and I'll wrap another video up over the weekend that will show how Friday closed and my thoughts for the new week, especially with the earnings release. And just remember, the overarching higher time frame says we're in a premium location. So for me, that means no trades on the long side. Absolutely not. I'd be fading this move, whichever way you and how you like to do that. That's what I plan to do. Thanks so much for watching. Shout out to the subscribers and anybody new that's watching this. Welcome. And I hope you stay tuned and subscribe for more videos. Aloha. Take care. Bye.